S&P futures taking a hit on warnings of high valuations and earnings from Palantir. 30 minutes till the start of trading. I'm Matt Miller.
I'm Dani Burger. Bloomberg Open Interest starts right now.
Coming up, Wall Street CEOs say investors should brace for a 10% correction in the next 12 to 24 months.
And those warnings adding to a bleak mood in stocks this morning as earnings from AI bellwether Palantir failed to impress.
Plus, it's election day. New Yorkers head to the polls to decide if a socialist will run the capital of capitalism.
An insane amount of things going on today, but it's Palantir that's kind of ruling the roost in terms of setting the sentiment, at least for this morning, because it is falling nearly 8% in the pre-market trade, even though after reported earnings that were really good, shares initially spiked. So it had strong growth, but the concern is about its valuations and earnings sustainability. Hedge fund manager Michael Burry also disclosed a put on Palantir shares after hinting at an AI bubble. Matt, he used a quote from Star Wars, which you'll probably know better than I, but basically saying it's like a Jedi mind trick is what the AI shares are.
Yeah, I'm not as steeped in Star Wars.
Okay, well, you just know movies better than I do.
Might think.
It was something like, these aren't the charts you're looking for.
Exactly, yes.
Yes, that's what he said,
yeah,
referring to something.
That's what basically Luke says to the people guarding Jabba's. Anyway,
okay, cool.
Tesla is dropping after Norway's sovereign wealth fund, the world's largest, voted down Elon Musk's $1 trillion pay proposal. You can see that shares are off just about 3% in the pre-market, and apparently some activists on Twitter, Dani, are also pressuring Schwab to vote against it as well.
Move to a different brokerage unless you vote for this pay package. Let's get back to Palantir, though, and the big decline we're seeing in shares. We're joined by Bloomberg Tech co-host Ed Ludlow. Ed, not only did Palantir do everything right, it exceeded expectations. Why are we looking at a stock getting crushed in the pre-market?
Yeah, I mean, the sell side very quickly went to the valuation and said this is a great time to take a time out, right? Palantir is a stock that going into its earnings print was up more than 170% year to date. Going into the print had the highest price to sales ratio of any company on the S&P 500. And what's really interesting is you have a commercial business growing above 120% year on year, a government business continuing to grow in the mid-50s range year on year, and the gap between those two closing. But outside of maybe some pointing to a lack of international growth, this was very much a valuation question where the valuation just doesn't give you enough to keep going, even if the fundamentals are good.
Is this enough to drag down the whole market? Because yesterday, you know, valuations be damned, as long as you were doing an AI deal, especially if it involved Nvidia, it didn't matter. But today we know Michael Burry from The Big Short has a put on both Palantir and Nvidia.
Yeah, overnight there were also the bank CEOs talking, I think in Asia and the Middle East, echoing similar commentary that you know, maybe it's a time to take a pause, but it's not necessarily a crazy market right now. The thing about Palantir is that they gave quite a lot of information, right? So for this current fiscal year, they slightly upgraded their sales projections. But one of the points that Bloomberg Intelligence and Mandeep Singh made in the main Bloomberg story is not unique to Palantir. It's something that this earnings season has been a theme for tech. Tell us more about next year, 2026 calendar year. Not necessarily about capital expenditures for the hyperscalers, which is the chart that Michael Burry was flicking at, but on sales. If you're so confident in your momentum, why are you not telling us what your sales picture or your profit picture looks like for next year? And that was the only kind of metric missing from Palantir in that respect.
All right, Ed, thanks very much. Bloomberg Tech's Ed Ludlow. He probably knows Star Wars even better than I. I've been corrected. Apparently, it wasn't Luke.
He's nodding his head. I was like, are you saying that because...
Do you know this, that I was wrong, Ed? Apparently it was Obi-Wan Kenobi who said these are not the droids.
OG. These are not the charts you're looking for.
Yes. Okay. Enough. We're not going to talk about that for the rest of the show.
I was like, are you making fun of Ed for being a nerd? Which, by the way, is the best thing you can be, but he did know it, so it's perfect.
No, I'm not saying that. I'm just saying,
all
right.
Nerd's awesome.
Let's move on to other earnings news. Pfizer raised its profit forecast for the second time this year as it battles for Metsera, and Hims and Hers is rising on news. It is in talks with Novo Nordisk, Pfizer's arch rival, to sell a new obesity pill. Joining us now is Bloomberg health reporter Madison Muller. Madison, I thought there wasn't a new obesity pill yet. Is there anything out?
Not yet. It's coming likely next year, but it's kind of funny. The big news both from Hims earnings and Pfizer earnings is Novo Nordisk.
Hang on. I think, again, we have a microphone problem, which is inexplicable because I'm staring at your microphone.
We can sort that one out, but I think as Madison was saying that all these earnings are basically tied to how successful obesity medications are and which are not.
It's also a fascinating battle between Pfizer and Novo Nordisk over Metsera, but I think we're going to try and get her microphone fixed, and then we're going to go back to Madison, who knows everything about these obesity drugs.
But you know what I was just thinking? If you are a stock in this equity market, if you are anything related to healthcare, you need an obesity announcement to go higher. If you're anything else, you just need an AI announcement. You need some sort of partnership with OpenAI or something else to be successful, and we haven't had that in the last 24 hours, and stocks are falling.
But those have been the themes for the last 24 months, right?
It's true.
All right, Madison, we can hear you again.
Great.
Tell us about Hims and Hers.
This has been happening on a lot of the earnings calls too, actually. The audio has been cutting out.
Don't say that you're going to start conspiracy theories, Madison.
It's been a problem. All right, so Hims and Hers now going to sell a Novo pill, and
hopefully, that's the hope for them.
All right, so that's good news, right? And they already have, I think, a tailwind because CVS wasn't giving people Eli Lilly's obesity drug.
Yes.
So, and instead they were giving you Wegovy or Ozempic.
And if you remember, Hims actually had a deal or a partnership with Novo earlier this year that sort of ended spectacularly in June, sort of a blow up between the two companies. So it's a little bit of a reversal and kind of interesting that now Hims is saying that they're back at the table and potentially negotiating a new partnership to have Novo's new obesity pill on Hims's platform, which the two companies both said nothing's been confirmed, nothing's been reached yet, but they are in talks right now, which would be good for Hims as they are trying to really get back in the weight loss game.
Madison, wonderful to hear from you. Thank you so much for joining. That is Bloomberg's Madison Muller. Let's now turn to fast casual dining earnings. And Yum Brands is undergoing a strategic review of Pizza Hut as sales fall behind the competitive pizza market. For more, we're joined by Bloomberg managing editor for global business, Shelley Banjo. Shelley, is it that the pizza business is competitive, which I'd assume it's always been, at least if you live in New York City, or just that fast casual is kind of struggling at the moment?
Yeah, yes, and I think so. Pizza business, very competitive for people in New York City. A lot of people might not necessarily think of Pizza Hut as pizza, but in most of the rest of the country it is. And but it's struggling. And Yum is doing pretty great otherwise. So KFC, especially Taco Bell, doing really well. And so CFO coming in and saying, you know, we really need to think about hard choices here. What are we going to do with this brand that we continue to try to turn around? And it hasn't actually happened yet.
Can I just say, and I was telling my team of younger people today, when I was a boy, and my parents would take us to Pizza Hut, it was an event. It was a dine-in restaurant with a dedicated happy waitstaff and video games, like a really cool place to go and delicious food. Is it possible that they go back to that, or?
Yeah, and we actually had the KFC parent company CEO come in recently and talk about that sort of moment, that sort of nostalgia of this generation that grew up with that, and can you actually get back to that? That's a very different value proposition than grab and go pizza or delivery pizza, like that Domino's has really done a really good job at. And so for them to be able to offer that sort of experience, it is going to take a slightly different business model, or maybe a return to that old kind of business model.
Elsewhere in consumer goods, Molson Coors also had earnings, and those were a disappointment. The forecast was in the lower range. Why? I thought beer was supposed to be one of these things that regardless of what happens, people will be drinking, and maybe even drinking more if things are going poorly.
So I think that was the conventional wisdom for decades, if not centuries. And here we have, in the last few years, a really big sea change in consumption habits with beer. Younger people are not drinking beer, a growing number. To tie in from, Madison earlier, a number of people are on these GLP-1s. It suppresses the appetite, but it also suppresses your need or want or desire for alcoholic beverages. And so they can say, it's not having a material impact, but you're seeing those bigger trends happening there.
And of course, we can't forget weed, right? It's legal in the majority of states across the U.S. It's an alternative for a lot of people. And later on in the program, we're going to talk to the CEO of a weed company turned Binance Treasury.
Yes.
So we're tying it all in. We're tying it all in. Shelley, thanks so much for joining us. Shelley Banjo covers covers company news for us, runs that coverage. Madison Mueller, of course, running the obesity drug coverage. Let's check on futures right now. As you know, yesterday we had not big gains, but green arrows into the close. 68.51, I believe, was the cash level on the S&P. Now you see futures down more than 1% on a warning from CEOs which, by the way, it's not a bleak warning.
No,
right? We could get a
all.
5 to 10% pullback over the next 2 years. I mean, clearly that's a possibility.
And they were like, and people would love this. They'd buy that dip, and I'm sure they would. I don't even know if we'd get a 10% dip because people would probably jump in before that. Some of the individual movers, though, Matt, on our radar this morning. We also had Uber earnings. The forecast underwhelmed despite posting its strongest quarterly growth since late 2023. Shares down 7.33%.
Spotify reported active users and revenue in the third quarter better than analysts expected, and yet the stock is down. This could be a theme in today's market. No matter how much you beat, a la Palantir, you could still get punished.
Yeah, it's been a theme throughout earnings. Also should point out that crypto stocks are sliding this morning. Bitcoin has hit its lowest level since June, getting caught up in the general sell-off of this morning. And in the next hour, as Matt mentioned,
we will speak with David Namdar,
yes,
who is running this company. CEA used to be a company that helped you grow weed. Now it's a Binance treasury company. So that'll be an interesting interview, to say the least. And we have Metsera shares right now actually suspended. It's getting an amended proposal from Novo, and as a result, those shares, I guess, you can be halted in the pre-market as well.
Right, and of course the background here is it's been Novo Nordisk versus Pfizer in a war for this company. Pfizer bringing up a lawsuit against Novo Nordisk and Metsera in an attempt to block this merger.
Coming up, Tesla shares are falling as the world's largest sovereign wealth fund voted down Elon Musk's $1 trillion pay package. Will expand. This is Bloomberg Open Interest.
Let's check in on the share price of Metsera, Novo, Pfizer, because breaking in the last few minutes, Novo Nordisk has boosted its bid for Metsera. The amended proposal would value it at $10 billion.
Wow.
Pfizer had also sweetened their offer, too, for Metsera. It is a battle between these two companies of who can get their hands on this company that might offer a new obesity pill. Pfizer obviously wants it because they don't really have that great of an offering when it comes to obesity medication, whereas Novo already obviously has something.
Anything, really, right?
Yeah, correct.
It's your choices now are Wegovy or Ozempic, or Lilly has Mounjaro and Zepbound, and that's pretty much it in terms of the GLP-1s.
Yes.
It'll be interesting to see what comes of this battle. It's a court battle. It's also a battle in sort of the court of culture, right? We'll see. How do we make the switch from obesity drugs to Norwegian cruise lines?
Well, I guess it's all stocks that are moving, and maybe that's a bad one because I should say Metsera is actually halted, so even a bad segue in its own right. But look at this move in Norwegian Cruise Line. They're warning of a rough fourth quarter. That's despite 2026 demand levels that are at a record, shares declining 10%.
All right, so getting absolutely decimated. That's a literal definition of the word, to be reduced by a tenth. Ferrari, on the other hand, reporting robust earnings due to higher prices and demand for their customized cars. Bookings are sold out through 2027, if you could even get one of those, and you have to obviously buy some of the starters before the dealer will allow you that high up the chain. But Ferrari shares boosted 1.2%. They have yet, however, to make up the big drop that they saw the last time they had their Capital Investors Day.
And in other car-related companies, Hertz, they swung to a third-quarter profit. Matt, I know that this is a company you've been closely watching. It's been prioritizing new cars in its fleet. Shares are up 14% in the pre-market off the back of that.
Yeah, I think a fascinating story because of Tom Wagner taking this over. Since then, it's had its troubles with Tesla. Bill Ackman then taking a stake, a vote of confidence there. The CEO, Gil West, has really innovated, working with, for example, Palantir to help them more efficiently run the fleet. So really, really cool story. Craig Trudell leads Bloomberg's global autos coverage. He joins us from London. And Craig, I guess before we get to Tesla, Hertz with an amazing jump in, 14% in a pre-market gain is pretty amazing. Do investors think this company has really turned the corner?
Yeah, it's interesting. We are seeing the shares settle down a little bit in the main session, but I do think that this was a company that, to your point about the issues with Tesla and this sort of broader EV bet, a year ago that was, what was really plaguing this company, that they went so big on electric vehicles, really sort of overinvested in adding them to the fleet. They ended up, really hurting the company from a depreciation perspective, and also I think there was just a sort of general mismatch of where the company was at in terms of its optimism for its customers' interest in electric vehicles versus where its customers actually were. And we've seen it take quite some time for the company to sort of clean things up and clean up after that mess.
Hey, Craig, Matt mentioned Tesla. The news about that overnight being that the Norwegian Sovereign Wealth Fund, the huge fund and a big holder of Tesla, is going to be voting against that $1 trillion pay package. Why and how big of a blow is that to Elon Musk?
Yeah, it's interesting. I think the NBIM kind of took a approach of, on one hand, saying, look, we appreciate the sort of vision of Musk and how much he's driven shareholder value for this company over the years. On the other hand, this is an awful lot. It will dilute other shareholders, and they also sort of raise concern about, unmitigated key man risks. So, these are some of the same points that we've heard from, say, institutional shareholder services or Glass Lewis. We also had CalPERS come out against this pay package last week. I would say, though, that, just based on what we've seen the last few years when, Tesla has put together these sorts of awards for Musk, they at least, if passes precedent, this will end up, being approved without much trouble because the votes haven't been particularly close.
Tesla had been having a tough year. Right now, it's up 16%, although it has tripled and then some over the past 5 years. Craig, it occurs to me I haven't talked to you since Carlos Tavares's book push came out. And he said a lot of really interesting things about the industry that you cover for us. One of them is that Tesla may someday not even make cars. What do you think about the Carlos Tavares revelations?
He's really had some spicy takes, yeah. It was about a year ago that he left Stellantis. It was in December of 2024. I think he's kind of on a tour now to sort of weigh in on the state of the industry. And I think his take on Tesla was really interesting because it sort of speaks to me to this sort of broader theme of indications that Musk is not, particularly interested in doing what you would expect a car maker that is having trouble with sales would do, which is to sort of replenish the lineup, reinforce what you've got to offer. I think it's actually been to Tesla's benefit that they've had a couple of really big sellers in the Model 3 and Model Y, but the absence of a lower cost vehicle the company has really been paying for.
All right, Craig, thanks very much. Craig Trudell there, our global auto czar, covers cars for us out of London. Let's get now to high interest to look at what else is making headlines around the world. Michael Burry's Scion Asset Management is disclosing new bearish bets on Nvidia and Palantir. They bought put options just days after the Big Short famed investor warned of market bubbles. The move revives Burry's earlier bets against AI-linked stocks, echoing his caution that the boom may be built on shaky ground. New Yorkers head to the polls today. They will choose between socialist Zoran Mamdani, ex-governor Andrew Cuomo, and Republican radio host Curtis Sliwa, seen here in his patent red beret. It's a high-stakes mayoral race that becomes a national test, really, for the Democrats in a lot of ways. Meanwhile, bomb threats temporarily shut polling sites in 7 New Jersey counties. Sites have been secured and some have reopened. Authorities are urging voters to keep casting ballots in the state's gubernatorial race despite the disruptions. And Dick Cheney, one of the most powerful and polarizing vice presidents in U.S. history, has died at age 84. His family said he passed away last night from pneumonia and heart complications. As George W. Bush's vice president from 2001 to 2009, Cheney shaped America's war on terror and helped lead the invasions of Afghanistan and Iraq. His push for expanded executive power and controversial interrogation tactics defined the post-9/11 era and left a legacy that still divides Washington.
Of course, it is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months. And I'd say there are very few people in this room that don't think that that's a meaningful possibility. It doesn't mean that the general direction of capital flows, investment, portfolio allocations changing. It just means things run and then they pull back so people can reassess.
Goldman Sachs' David Solomon joining us now. We're Citi Wealth Head of Global Wealth at work, Kristen Bitterly. Kristen, listening to Solomon there, okay, it's not that controversial to be like, markets might drop 5% in the next 12 months.
I think that's right. I think, and he said over 12 to 18 months, looking
right
out a year to 18 months. I think we have to remind ourselves that in a normal equity year, you'll see probably 1 to 2 pullbacks of 5% or more, and a pullback of 10% or more is healthy. I think it basically is this comment around the concentration and whether that's sustainable and whether that's going to be sustained through both record high earnings and continued CapEx expenditure. That's the question on everyone's minds.
I just wonder if we'll ever see that with retail investors buying the dip like this.
Well, you have so much cash on the sidelines too. If you have in excess of $7 trillion of cash on the sidelines, even when we've seen those moments of volatility and pullback, they're met with a bid.
All right, Kristen, we're going to keep you with us through the open. Kristen Bitterly there from Citi sticking around for the opening bell. It's next. We're looking at futures that are down more than 1% on those valuation concerns. This is Bloomberg. All right, we're moments away from the start of trading. After some euphoria on AI deals, we get some concern on valuations. As a result, we see futures down more than 1% on the S&P, almost 1.5% on the Nasdaq, and more than that on the small caps. In terms of the opening bell, pretty exciting day down at the New York Stock Exchange. You get Beta Technologies ringing the opening bell. These guys are doing electric and automated flights. They had flown recently from Montauk into, I can't remember, it was either JFK or LaGuardia. A lot of ink there on the podium as well. And then down at the NASDAQ market site, it doesn't always have to be exciting, right? These are still financial markets. Northern Trust ringing the bell. They have a new ETF, and it's something about tax-exempt bonds, which is a good way to make money, or at least not spend too much.
Yeah,
Dani?
Boring, isn't that like a Warren Buffett thing? Like, boring is beautiful. That's
yes.
what you want in finance.
I think of my radio co-host, Paul Sweeney. He goes home after work and he swims in a pool full of munis, and he's never regretted it, you know?
That's a beautiful visualization.
Yeah.
Thank you, Matt. Would you regret if you were a holder of Palantir? Probably not, considering the thing has run up 150% year to date. But this is what happens when the rubber meets the road. And the earnings are really good. There was strong growth, revenue growth at 63%. But it's the concerns about valuations and earnings sustainability. Hedge fund manager Michael Burry also disclosed that he has a short via puts on Palantirs after hitting an AI bubble. So, Matt, those shares down just under 8% this morning.
All right, and Novo Nordisk and Pfizer, we've been talking about this. Both of them have amended their bids. They're really in a bidding war here for Metsera, with Novo valuing the company at $10 billion. Those Metsera shares, they were halted in the pre-market. We'll check and see if they're going to open up at some point. It'll take a little bit longer to settle the trades and open up this morning.
I think 9:50 is when they said that they'd open up, so we got about 20 minutes time.
All right, excellent, excellent. So those market makers really earning their keep. We are back here on set with Citi's wealth head of global wealth at work, Kristen Bitterly.
a mouthful.
It is a mouthful.
Citi Wealth.
But the point is, you know, what you're talking about when it comes to these markets, and we seem to, even though there's no volatility in terms of the VIX, right?
Yep.
We seem to have these big swings where, you know, you get $38 billion deals and everyone wants to buy anything related to AI. And then you get a warning about valuations and, okay, 400 times sales is a little bit frothy. What do you do in this kind of, when you have money to put to work in this kind of environment?
So I think you have to take a step back and kind of address the question, are we in a bubble environment? Because that's really what people are asking. Are these valuations sustainable? And from our viewpoint, we're not. And so when you compare it to prior bubble environments, they were fueled by leverage. They were not fueled by earnings. And so I think one of the things that gives us a lot of comfort is the fact that even yesterday when you saw with Palantir, you're talking about companies that are delivering record earnings. They continue to deliver on the top line, both in revenue growth as well as earnings. And a lot of the investment that's happening, so you could then shift and say, well, what about CapEx? Is that a bubble in terms of all of this investment? If it's being fueled by free cash flow generation, that is very different than companies that are building, kind of betting on the future via leverage. So that's why we're comfortable where we're at right now.
But the question that I love to ask is, if you're already fully allocated to the AI trade, right? If you already own enough mega cap tech stocks, would you buy more at this point?
No. So I think like when you look at our portfolios, we actually, you guys were saying earlier, like boring is best. We are very well diversified within our portfolios. So yes, we have a bias towards the US market versus international. We have a bias towards large mega cap companies with strong free cash flow generation. But we also have fixed income allocations within our portfolios and managing a duration of around 5 years. So you can see there is a balance within our portfolios to help mitigate some of that volatility. But when asked the question, do we think that this momentum and we could grind higher from here until year end, given the seasonality, I think we could.
But what else do you buy within equities? Because breadth has been remarkably bad. We're kind of getting back to that environment where big cap tech leads us higher. The equal weight is down over the past month. Every single data track had the statistic that even within every single industry group, the equal weighted version has also underperformed. So it's not even just tech. Do we get this long awaited for expanding out at some point?
Yeah, so I think your question is almost like, where do I put fresh capital to work today? What am I doing? And so I think the question to ask is, are you a trader or are you an investor? So if you're someone who basically is going to be watching that screen every single day, trying to make money on a trade, that's a different question versus our clients who generally are in it for the long game and they are investors. So I think there's two key things to keep in mind. One is this idea of legging into a diversified portfolio, tried and tested, so that way you're not putting all of your money or all of your capital to work at once, makes a ton of sense. Remember, there's a lot of strategies that are hedged too and offer downside protection. So we were just talking about the VIX being relatively muted. What that means is you can invest in equities with a degree of downside protection and help mitigate some of that future volatility. One more quick comment. We talk about the equity market always being like, should I invest at all-time highs? 44% of the time, US equities are trading within 5% of all-time highs. This is actually a normal phenomenon to kind of say, am I going to be the person who gets in at all-time highs? And had you said that at the beginning of this year, we know how that played out.
That's a great stat. What is it, 45% of the time?
44% of the time, US equities are trading within 5% of all-time highs.
By the way, this is why I'm so cowardly. This is why I don't have the courage to be, fully invested by myself. I'm not allowed to obviously trade for my own account, but
that's the question if you're a trader or an investor. So if you're someone who's actually saying, I am looking to put capital to work long term, then you ask the question, all right, when are these companies actually going to be held accountable for an ROI on their investment? And I think right now, looking out kind of the 12 to 18 month time horizon, the market's patient. Like right now, the market is patient in terms of this capital expenditure, saying that we know it will take time, but there will be an inflection point when earnings are impacted, when you're not seeing that ROI, that will delineate between the winners and losers.
How, and the people you're speaking to, how receptive are they to that? Or are they like Matt and feel nervous around all-time highs?
You know what I would say is our clients, particularly within the Wealth at Work business, we cover very busy professionals across the legal profession, consulting, pre-IPO, post-IPO companies, and asset managers. And so for them, they are busy professionals trying to do right by their careers and then also take care of their families and everything else going on in their lives. So they are very much about out, let me have a plan, let me make sure it's in line with my risk tolerance, let me make sure it's in line with my liquidity needs. And what you find is this idea of market timing, there's so much data around this that if you are out of the market on 2 of the best days in any given calendar year, you can erase close to 80% of your per annum returns. So this idea of having a plan and sticking with it, we even saw this in Liberation Day earlier this year. Our investors were okay. They were absolutely fine. They're like, should I rebalance? Should I actually position more towards and tilt more towards risk because there's a pullback? So I think it's key to know like what are your objectives and what is your time horizon, and that helps you stay invested.
Also like that because like in April 2nd, the smart money, the institutional money moved away from this equity market, whereas retail went into it. And that proved to be the right thing to do.
Yeah, and there's always, like, when we look at what are we watching very closely, we're watching the employment backdrop very, very closely, particularly within areas like the youth unemployment rate. That's an area that's now exceeding, 10%. And that's some of those shifts that could happen within the labor market, that you have people graduating from college. What are those entry-level positions that they're coming into? Could that be a repositioning of the labor market? So those types of dynamics we're watching very closely, but then you have to ask yourself the question, could you be in an environment where you could see that tick higher, but ultimately the equity market is going higher too, because this is leading to productivity gains, more profitability, and that could be a very interesting reality.
Yeah, you've got to be able to separate that. Kristen, this is why we have you on. Thank you so much for joining us. Kristen Bitterly there of Citi Wealth. Let's get a check on what's going on in the markets right now. You're going to look at the move screen.
Yes, indeed I am. And I don't know, it's been 24 hours without an announcement of OpenAI or Nvidia partnering with someone. So here's what you get. Instead of that, you get a market that is down decisively this morning, down 1.2% to the upside. Berkshire Hathaway continues its run after its earnings this weekend. Apollo, really strong earnings, getting very close to managing $1 trillion. To the downside, just given its sheer size, Nvidia dragging this market down by 16 points. Michael Burry posting on X that he has puts on Nvidia, or he didn't post that, he just posted some negative charts about Nvidia. But it's all the Mag 7, and Palantir continues to be a sore spot this morning, down nearly 10% after earnings that were stellar. But it comes after an 150% rise. Looking at the individual industry groups this morning, too, you get a real flight to safety. The only things that are doing okay this morning are consumer staples and real estate. Everything else is falling. Infotech leads with that drop in Palantir. Oil is also off this morning, so energy stocks aren't doing well. So, Matt, a total drop of more than 1% so far this morning.
All right, coming up, more on the AI trade as Palantir and Nvidia tumble on fresh doubts about stretched valuations. For Palantir, that's more than 100 times sales. This is Bloomberg Open Interest.
Get your top calls this morning. The analyst action that we're focusing in on. First up, Bank of America cuts both DraftKings and Flutter, citing mounting headwinds across U.S. gaming. The analysts say that volatile sports outcomes, tax risks, and uncertainty surrounding prediction markets is creating what they say a perfect storm for the sector. Shares down 3.6% for Flutter. Next up, Wall Street weighing in on Denny's go private deal. Analysts note that the sale is part of a broader trend of private investors snapping up smaller restaurant chains that have fallen out of favor. They now say that shares trading on the buyout rather than fundamentals, and note that low valuations could spark more acquisitions in the sector. Shares up almost 50%. Finally, analysts were largely positive on Palantir's third quarter results, calling them outstanding. We did get a lot of warnings, though, that the stock valuation at over 100 times next year's sales looks stretched. Its 12-month forward price to equity earnings ratio, makes Nvidia look cheap. Matt.
All right. Yeah, we're going to be talking a lot more about that right now. We're joined by Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh, and Bloomberg Tech co-host Carolyn Hyde. I was telling you guys, I got a message from a viewer who says he really looks forward to squeezing Michael Burry because he doesn't have, and by the way, this is an investor I've known for 20 years, and he's incredibly successful. He says he doesn't have any stocks more spectacular than Nvidia and Palantir. What do you think, Mandeep?
Well, right now, I feel everyone is investing so much in AI that Palantir, being a high-ticket item, is sort of an insurance to make sure you have, the data you need to train your AI. And that's where the results were phenomenal last night. But when you think about, a customer spending $45 to $50 million just on Palantir software, I mean, do you think it's going to be sustainable, with all the enterprises spending so much money on one software? And that's where the skepticism comes in, because you want to see that 50% plus growth carry on to 26, 27, and beyond, because that's what the LLM companies are doing right now in terms of OpenAI, Anthropic. I mean, these companies are going triple digits. And even OpenAI doesn't have that kind of multiple that a Palantir has. I mean, right now, OpenAI and Palantir have the same valuation. Both are valued at $500 billion, but OpenAI is growing triple digits, and Palantir is growing 50%. So great growth, but you still draw a comparison between which company has more sustainable growth, and chances are it's going to be OpenAI.
But although we also don't know what kind of valuation they would have if Wall Street Bets got to weigh in. I mean, it's not really a fair comparison, right? Because if retail could buy them on the open market, I mean, I'm sure it would be worth well over $1 trillion.
Just to put it in perspective, Palantir is at a $5 billion revenue. OpenAI right now is close to $15 billion in ARR. So it's already 3 times. So yes, I mean, the multiple will likely be lower for OpenAI, and the valuation will be higher than the $500 billion it's currently valued at, but it's still growing a lot faster than all these software companies. I mean, just think of OpenAI as a software company. How many software companies are there with 15 billion in ARR? So OpenAI is already among the top 10 software companies out there, and it's growing triple digits. So from that perspective, Palantir does look valuation, just on a relative basis, when you attach a valuation multiple, Palantir's $5 billion revenue run rate is 3 times lower. And then why should it be valued at 100 times sales when you've got a company like OpenAI that's growing?
But it's still the thing that just everybody is turning to for Palantir. It's a valuation story. And a lot of things are selling off alongside of it today, Caroline. And I wonder if there's a sense where just broadly, with the big tech hyperscalers, with Palantir, with Nvidia, the sense of this market is Palantir is kind of a poster child for momentum, heavily valued stocks. And today is a day of just selling it all, not necessarily off of anything fundamental.
Even when the fundamentals really prove out that the growth is still there. And yes, to the point that maybe compare it to an OpenAI, but in the public market, and when you're thinking how asset-light more broadly Palantir is, they don't have to be paying for all the GPUs. What they're paying for is fewer and fewer sales representatives. And you'll get a Bank of America analyst, we're going to have her join the show a little bit later, who's saying they're so peerless with their go-to-market offering, the way in which they're injecting the engineering talent within your business. No wonder they're scaling so much in the US. But international growth was a weak point. It's interesting, actually, that the sell-off almost started in Asia. The angst started to come that SK Hynix has rallied too far, too fast. And over in Asia, you get regulators stepping in saying, by the way, we're worried about this 200% growth in SK Hynix for the investor base. Then you start seeing that spill over into the European anguish and then into the US. And Michael Burry, look, he doesn't particularly manage the most hugest amount of money out there. But still, when you've got someone who made so much money on a bet in the previous sell-off, and now you've got someone saying, look, I'm going to take almost $1 billion out in terms of overall bearish calls on this particular stock, and the fact that they think that they're going to make a load of money if the stock price does fall. I think analysts have said fundamentally Palantir looks beautiful, but when you're looking at a valuation, no wonder you've only got a third of analysts are saying you can buy at this particular level.
I mean, he was played by Christian Bale.
I know.
It's pretty. I mean, that's better than managing a
I think people listen to him
for
for reasons besides just the Christian Bale.
plays the drums.
But his memes do keep echoing Christian Bale and Star Wars now. He's like using Star Wars.
I got to ask about Nvidia. I mean, I can understand, okay, Palantir's valuation is insane.
Yeah.
Even if you believe in it, and even if you own the stock, you have to admit, well over 100 times sales is nuts. But what about Nvidia? They don't trade at insane valuations, do they?
No, they don't. And look, that's where you need that sustainability of top-line growth. I mean, right now, you're looking at this ecosystem where NVIDIA is supplying the GPUs, OpenAI is training the models, it's deploying the GPUs, everyone is using the tokens. And that's where even a Palantir uses an OpenAI's LLM or Anthropic LLM, even though they say they are LLM agnostic. They are using someone else's LLM. They don't have their own LLM. So imagine if OpenAI raises prices, that's going to have an impact on Palantir. So from that perspective, the companies that are controlling the software world right now are the Nvidias, the Microsoft, the hyperscale cloud providers, the OpenAI LLMs, and that's where you see, the bulk of the valuation and the market cap being reflected.
Hey, Mandeep, Caroline, thank you both for joining us. This was excellent. That is Mandeep Singh of Bloomberg Intelligence and Bloomberg Tech's Caroline Hyde. Of course, tune in 11 a.m. to Bloomberg Tech to watch Caroline cover this further. And coming up in the next hour, we're going to have more on the sell-off with Wall Street's biggest bull, John Stoltzfus. That's coming up on Bloomberg Open Interest.
You should do it. This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing as we worry about valuations. You see drops on the S&P right now down to below 6,800, a drop of 0.75%. The Nasdaq 100 down 1% to far less than 26,000 now. So we're dropping below these big round numbers that we had punched through last week. Take a look at the reasons. Nvidia is down 1.8%. Palantir is down 8.5%. This after we had a number of CEOs, big bank CEOs, including David Solomon, warning that we could see a 5 to 10% pullback in the next 12 to 18 months. And then, of course, valuations is the biggest concern with Palantir as it trades at well over 100 times sales. Pfizer is gaining as it gets into a continued bidding war with Novo Nordisk. It's interesting to see Novo down and Pfizer up. Apparently, Novo they both put bigger bids in for Metsera than they previously had. Metsera is halted, so it's unchanged at 60.73. But right now, Novo Nordisk is valuing that company at $10 billion. And Hims & Hers is going to possibly sell or will sell the Novo Nordisk pill when it comes out to fight obesity. Dani?
Let's get more on the story on Novo Nordisk, Pfizer, and Metsera. Joining us is Bloomberg Health reporter Madison Moeller. Madison, more bids are in, higher price, the war continues. Does it feel like one of the either between Pfizer and Novo is really in the lead to take this company?
Well, according to Metsera, Novo's increased offer is still better than Pfizer's. But in about an hour, we're actually going to see this continue to play out in court in Delaware because Pfizer is trying to get from last week, Novo's increased bid, it sort of started a countdown or a clock of 4 days for Pfizer to increase its offer. So Pfizer sued last week to sort of stop that process from happening. That hearing is still happening, according to our sources at least, in about an hour, as at the same time these companies are now increasing their bids. So the drama is continuing to play out. Metsera is saying that, again, Novo's offer is better, but remains to be seen sort of what happens in the court.
So Novo sells, obviously, Wegovy and Ozempic. Eli Lilly has the tirzepatides,
Zepbound, yeah.
Zepbound and Mounjaro, which is a horrible name for something that makes you stop eating. What does Metsera have for Pfizer? Is it also a GLP-1?
Yeah, so Metsera has a couple of different drugs in development. One of them is a longer-acting GLP-1, so it's similar to Wegovy and Ozempic, but you only have to inject it once a month versus every week, like the drugs that are currently on the market. And then they also have what's called an amylin drug, and so that's a little bit different. It's a different hormone. It's not GLP-1. It's thought to have fewer side effects, but work, just as effectively for weight loss. So Pfizer's looking at this and saying, we're not in obesity yet, and so this company has drugs that are potentially better than what's on the market today. And so if we're going to, sort of play the long game here and have to be in this next wave of companies that are getting into the obesity space, why not buy a company that has potentially better drugs and sort of this next generation wave of treatments?
All right, Madison, great to get a roundup with you. Apparently, Metsera is trading again, up 13%. Doesn't Mounjaro make you think of eating?
No.
Manja.
It sounds like, in that way, it sounds like a board game to me.
Well, it's an injectable fat drug.
Correct.
Coming up in the next hour, John Stoltzfus on the big tech sell-off and AI bubble talk. He's the biggest bull on Wall Street. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Dani Berger. Some of the bigger losses you had in the future session are easing. We're not even down 1% despite some of the warnings coming from CEOs, Matt.
Yeah, we're going to talk about those warnings this hour. Wall Street CEOs say investors should brace for a 10% correction in the next 12 to 24 months.
A very easy call to make. I have to say, though, those warnings adding to a rather bleak mood from this. Earnings from AI bellwether Palantir have failed to impress.
And it's election day. New Yorkers head to the polls to decide if a socialist will run the capital of capitalism. Capital of the world, we used to call this New York City. Would it stay the same if Dani wins? We begin, though, with the Wall Street CEO warning that investors should brace for a pullback.
Of course, it is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months. And I'd say there are very few people in this room that don't think that that's a meaningful possibility. It doesn't mean that the general direction of capital flows, investment, portfolio allocations changing. It just means things run and then they pull back so people can reassess.
Joining us now is the biggest bull on Wall Street. John Stoltzfus, Oppenheimer Asset Management Chief Investment Strategist, has a 7,100 S&P target for the year end, and he joins us on the desk. John, great to have you with us on a day like today. I imagine you would welcome a 10% pullback.
Well, I wouldn't mind a 10% pullback. That said, I don't think it's going to happen between now and the end of the year unless we get some kind of a catalyst that gives bears and skeptics an opportunity, and nervous investors an opportunity to sell without FOMO. And what appears to be a remarkably resilient earnings season, where you have the jobs situation, even with the blackout in data, still looks remarkably good considering where we are with the hike cycle that started in March of 22, and the Fed being slow to remove the tightness in their policy. But we've got to say, we think more things are getting better than worse. But that said, I'm not surprised to hear these CIOs and CEOs say what they said. But usually about this time of the year is when they get bearish for next year. You remember going into this year, the thought was, it seems like every year in 23, 24, 25, the recession is coming. And we have to see if that really, you have to have a lot of factors move in a direction for that.
Well, a lot of the things that made people bearish this year was the election of Donald Trump and the concern about policy volatility. George Servelos at Deutsche Bank makes the point that euro-dollar volatility 12 months out has finally come back down to the levels of before Trump was elected, that the market is saying the risk is over. The risk of geopolitics, the risk of various tariff regimes coming in, all that risk is done. Is there any policy risk left? Is there anything that Trump at this point could do to shock the markets?
Oh, I think, in terms of the art of the deal, anything is possible along the line. And when you consider the other sides that he's dealing with, whether it's in domestic or geopolitical issues in terms of negotiations, there's all kinds of bumps in the road that we may have to undergo. But what we have seen is since the great financial crisis, on through the COVID pandemic, on through the supply chain disruptions and all the stuff that's happened, is the market is focused on revenue growth and on profit growth. And as a result of that, the market has been remarkably healthy in spite of things, great uncertainty. Part of that we can't help but think is that investors today, I've been in this business, I would say 42 years. It's not that I didn't think I'd live this long. I didn't know how soon it would happen. But when you look at it, it's the investors today are investing for long-term goals, and it has to do with retirement. Social Security is on everybody's mind generationally, across generations. And so people are investing very seriously. They're investing a little bit like Buffett, and so they tend to buy the dips, or at least they buy, most importantly, we think they buy the babies that get thrown out with the bathwater. And then you see some patterns. It just seems to be very typical of the earnings seasons that we've experienced this year. In the reporting seasons, the market sees somebody beats, and then the trading desk decide they'll never beat this again. And then so they sell it off. And as the later we get into earnings season and the better it is, the most likely we get, maybe a 3 to 4% kind of dip in here. And the fact that the honchos, have essentially told us that somewhere, what is it, 12 to 15 months, something like that. Well,
12 to 18.
Anything, anything can happen. I mean, it's just it's with all respect to them.
What do you make of the? Yeah, sure. I mean, over the next 2 years, you're likely to see a 10% pullback,
and it may rain too.
What do you make though of the circularity of these, trillions of dollars of AI deals on which and capex on which this rally is based? We have this chart, and I got to update it with Dell now getting heavily involved and a couple of others, but it still is, I think, very illustrative of what we're seeing, this back and forth. I'll invest in you if you buy my product, and you invest in me, and I'll use your services. Is that just how it goes?
I think that it tends to be at these watershed periods where you get that. This just doesn't look like the tech bubble. It's a much more sophisticated period of technology. Technology is deeply embedded in the lives of both business and the consumers. And it looks like AI, the Star Trek stuff, the real far out stuff, who knows? But the practical thing, the investment that we're seeing that companies are making in AI is to just, from a practical standpoint, is to look to maintain a competitive edge or to gain a competitive edge or just remain a good, growthier value company.
Well, or to cut costs, right? I mean, we've been talking about the fact that Amazon could eventually fire 600,000 workers, replacing them with AI. That's not fantastic for the economy, is it?
That's horrible. The thought would be, however, if those people have a tendency to be really sharp in turn, I don't think it'll be that number, but if it would be just let's say 100,000, what you're looking at is if you put tech-savvy people into the economy, you've got, other than communication services and infotech, you've got 9 sectors that would love to see those people to work for them.
Well, just to that point, because it has been the safe bet this year, despite the call for broadening out, that big tech has done well. Torsten Slok has been talking about not just a K-shaped economy, but a K-shaped market, where you have tech doing really well. The S&P average company earnings growth has grown by 11%, but consumer discretionary has fallen 2% when you take out Tesla and Amazon. Staples down 1%. How hard is it to find other things to buy besides AI names?
Oh, well, we've found good things to buy in the industrial sector where technology is utilized.
I was saying, but isn't that like kind of an AI name too, some of the industrials?
Well, it is just like financials. It is. So utilities, if you think about the national grid, gosh, that sounds terribly British, doesn't it? But
yes, it does.
Think of upgrading our grid. When you get doing that is a necessity. And those regulated utility companies are really, we would think, are in the catbird seat in terms of powering that electricity. No pun. Well, I guess I fell into a pun there, but working towards delivering electricity with increased demand from both consumers and businesses. So we come across it when we meet with people in the healthcare industry. They're thrilled about what AI is already doing for them. I recall I was at an institutional meeting here at Bloomberg, and they had kind of a network sequence afterwards. And there was a woman who was in healthcare who was attending it, and she said, "Oh, it's just fabulous. It enables her to be much more efficient, to find what she's looking for." And she even said, sometimes AI is better than I am. And I said, "Shh, don't say that."
National Grid, by the way, is indeed a British utility company. Not to be confused with, you mean the U.S. National Grid.
Yeah, exactly.
I wonder about the Hindenburg omen that we saw last week, which is a technical indicator. We have, I think, all-time highs with only 8% of the S&P hitting all-time highs, right? That's the concentration risk that concerns everybody. Does it not concern you because we haven't seen really the huge broadening out of earnings success that we thought we would?
Not as much in that what we have here. I can remember the Hindenburg effect was in the second half of 2009, and I was bullish at that time. And I was working with an institutional trading firm. And I would tell the traders when they said, "What about this Hindenburg effect?" And I said, at that time, Blockbuster was still in business. I said, "Go to Blockbuster and rent the video. Then you'll know what the Hindenburg is all about." But I don't think it's going to happen. And we didn't. The market did fine. I mean, that was quite a run-up. I think it was 60-some% from March 9th until the end of that year. And then it kept going until it ran. In 2010, you had Greece, and everybody thought Greece was going to sink the European Monetary Union, and it didn't.
John, always a masterclass for you. Always trouble. History doesn't rhyme, or rhymes but doesn't repeat. John, thank you so much for joining us. That is John Stoltzfus of Oppenheimer. Coming up on the show, Bitcoin wipes out its summer rally. We speak to one of the innovators in the industry, David J. Namdar, BNB Network Company CEO, a digital asset treasury company. We'll speak on the state of crypto. That's coming up. You're watching Bloomberg. Bitcoin continues to slide, now falling to its lowest level since June as risk appetite wanes. Joining us for more is Bloomberg's Matthew Griffin. In the risk mood in crypto, I mean, we're still trading, Matt, at 104,000. It is a slide from the highs. Is there any clear catalyst, or is it just like a general sell-off that we're seeing in equities today, too?
I think it's that and a couple of other things going on. So like we've been talking about all morning, you have questions about valuations, especially for some of the riskier corners of the market. We have warnings about a correction. So that hits the stocks that are linked to crypto. It hits crypto spot prices. Those are seen as riskier bets. I think, though, at the same time, it's coming at a particularly bad time in the market for Bitcoin in particular. So a few weeks ago, when we had the latest round of volatility on trade, there was a big selling event and a big liquidation event for some leveraged Bitcoin positions. You had a lot of people get wiped out entirely, and Bitcoin investors have tended to stay on the sidelines since then. So you don't have a lot of buyers ready to step in to put a floor in when there's this kind of negative sentiment, and I think that's contributing to it as well.
All right, Matthew Griffin, thanks very much for setting us up. I want to get to our guest here on crypto. David Namdar joins us in the studio. He is the CEO of a BNB Network Company, CEA Industries, which is a Binance coin treasury company. And David, it's great to have you on set with us. We've had these treasury companies, most famously, obviously, Strategy with Bitcoin. Tell us about the company that you used to take this over, because I think it's very interesting. They were making essentially apparatus to grow weed, and now you have turned that company into a $500 million Binance treasury company.
That's right, and thank you for having me here. So the company, CEA Industries, had historically been involved with the agricultural equipment business. There's no actual part of the business that's dealing directly in cannabis. And then we had just completed an acquisition.
But the ticker was vape.
Well, it was vape, but we changed it to vape because we completed an acquisition of vape stores in Canada called Fat Panda. And now, as of August, we kicked off our BNB treasury strategy under the brand name BNB Network Company, and we've managed to accumulate over 500,000 BNB in the last couple of months.
I was going to say, when the strategy was first announced, the company itself, CEA Industries, in the trade, I mean, the thing just like soars in July. And then steadily it's been trading back down and back below levels before that you first announced this. Do you think that investors are not fully appreciating what you're doing? Or what's going on, do you think, that like you initially had all of this hype and excitement, and since then it's just kind of trailed off?
I think that's a broader kind of market condition of what's been happening around the digital asset treasury wave, that there's been a lot of excitement, a bit too much overexcitement. I've actually tried to really caution people from buying into the hype, buying into when you see an announcement. Oftentimes investors see that a deal happens, but they don't understand where the capital actually comes in, whether it's a pipe, whether some other mechanism. And so, you know, it's important to kind of understand a lot more of what the actual underlying value of the assets are before buying into it. And so that's kind of been what's played out over the last couple months. And now it's led to an opportunity where a lot of these treasury companies are trading significantly below their net asset value.
This is an interesting asset to choose because, you know, CZ was obviously a felon, the founder of Binance, before he helped the Trump family make a lot of money with its USD1 and then got a pardon from the president. The U.S. government has said this is a currency that was used to fund Hamas, to fund Iranian terrorists, to fund Russian drug dealers. Why would you choose this as the basis of your treasury company?
Well, I think that story is really misunderstood. That, to me, when I think about what BNB is that it's really been the most overlooked and misunderstood asset in the space, and I think as well undervalued. And so BNB has become kind of the asset in the crypto space that powers the entire crypto economy. It has the most usage on centralized exchanges, decentralized exchanges, and stablecoin activity. And I really think that as the story, now that the pardon is out there and as more regulatory clarity is just for the whole crypto market, we're going to be hearing a lot more about BNB.
Can you just, for the layman, explain the difference or explain the important aspects of BNB? Because I know that you burn coins, which is different than what we would know about Bitcoin or Ether.
Sure. So BNB was introduced 8 years ago as Binance Coin, as you alluded to, and then it evolved 5 years ago to BNB Chain. And so since then, it's powered by or related to Binance, which is the largest, by far the largest crypto exchange in the market. Just to give you a perspective there, Coinbase is publicly listed about 100 billion market cap today. Binance is somewhere between 5 to 15 times larger than Coinbase, and it might never be publicly listed. And so BNB is in a way the only way to get exposure to the Binance ecosystem and now its own thriving ecosystem across all of Web3. And then additionally, it's the only large crypto asset that has a burn or deflationary mechanism, which is similar to a share buyback, where the supply is getting reduced by 4 to 5% per year.
So now that CZ has his pardon in hand, do you expect him to play a bigger part in the Binance ecosystem, and what might that look like?
You know, as a friend, I'm very happy that it happened. As an investor and entrepreneur focused on BNB, I look at it that there's a number of positive catalysts. Anything, if Binance is able to re-enter the US market in a big way, if US investors are able to access overseas exchanges, a lot of them are going to end up on Binance, and all of that leads to significantly more holders of BNB, which should benefit the asset long term.
You know, CZ used to work here.
Really? I did not know that.
Which is pretty cool. Yeah.
That is very cool.
And you used to work, if I'm right, at UBS, Goldman Sachs, at Millennium. So you have strong institutional background, and I wonder what you think about the institutional adoption of this currency. Obviously, a lot has been made about the institutional adoption of Bitcoin and Ether. What about Binance?
So that's really one of the things that I'm out there trying to highlight. Because I've been around for so long, you know, I used to come into this office dozens of times over the years. And what I've seen is that this year, particularly the last 12 months, the regulatory environment's been much more favorable to crypto. It's led to a lot of important crypto companies getting public, Circle, Gemini. It's led to this wave of digital asset treasuries as the crypto and capital markets converge. And that leads to some friction, right? But at the same time, it gives me a lot of excitement about where we're heading over the next 1, 2, 3 years, that we're only going to see a lot more institutional capital flow into the crypto space. And I think particularly a lot of that is going to end up in BNB as they learn about it.
Does it hurt or help the widespread adoption of the digital asset treasury model? You've seen at least 100 companies so far do it this year, and they are as small as, I think there was a nail salon in Japan that did it. You have marketing agencies, things you wouldn't necessarily connect with crypto. Is that a good or bad thing for the ecosystem?
Well, I think one of the things I like to point out is actually, if you go around the world, the amount of companies, both public and private, that hold US dollars but are not US companies, that hold euros but are not European companies, that's a natural thing to hold an asset that is superior to your local currency. And so what we're starting to see is a lot of companies around the world are realizing the merits of holding Bitcoin, Ethereum, BNB, much more so than their own currencies. BNB, if you could think about it as an economy that has 300 million participants today. So if you're part of any small country, the idea of tethering yourself to that larger economy seems much more attractive than holding, you know, an inflating fiat currency.
I don't know if I've ever told you this either, but you know I lived on Bitcoin for a couple weeks. Back in 2012.
I know you held Bitcoin. I didn't know you lived
It's the only thing I
on
spent.
Bitcoin.
I stopped spending dollars for 2 weeks.
Did you eat?
I bought, yes, I found a grocery in Greenpoint. I found a gas station that would take it. I found a bar that, you know, would sell me beers and stuff.
Wait, was this for journalism or just for kids?
Yeah, for work.
Okay, yeah.
But obviously, I would never do that today, right, David? If I held the asset, I wouldn't spend it, and I'm sure the same is true with Ether or BNB. So do you think we're ever going to transact in these currencies?
Well, I think, you know, and I remember when you did that back then, and that's one of the mistakes a lot of people who've been early in crypto have been, is that there's a lot of regrets about any time they spent their Bitcoin.
Yes.
And I think today, as the markets evolved, a lot more people are comfortable with the idea of using Ethereum and BNB and some of the other assets to actually spend and interact with things, and also to invest. So we're seeing stablecoin activity pick up. A lot of the wave this summer after the Circle IPO and a lot of the Ethereum treasuries was around that stablecoin hype. Well, there's actually a lot more stablecoin activity even on BNB chain, and it's at a significantly lower price point. So it's more conducive to having that activity scale over time.
And you bought Bitcoin at $10, right?
It's my earliest. Sure.
I hope you didn't sell that.
I've been through a lot of ups and downs in the crypto space, so.
All right, you notably didn't answer my question, but David, great to see you. David Namdar of BNB Network. Still ahead on the show, it's election day. We'll get an update from the ground on New York City's mayoral race. Plus, we're live in Jersey City with Congressman Rob Menendez as voters head to the polls to elect a new governor. That's to come on Bloomberg Open Interest. Despite warnings from David Solomon of a 10 to 15% correction over the next 2 years, markets not falling that much. Futures were down 1.5% here. About an hour into the trading day, we're only down 0.5%, but the Nasdaq does underperform with the pain from Palantir. The rich valuations mean even a stellar earnings, Matt, weren't enough to save Palantir shares today.
Yeah, no, today, although it still has had an incredible run and is still valued at more than 100 times sales. Still ahead, we are live in Jersey City with Congressman Rob Menendez as voters head to the polls to elect a new governor. This is Bloomberg Open Interest.
The MAGA movement's embrace of Andrew Cuomo is reflective of Donald Trump's understanding that this would be the best mayor for him. Not the best mayor for New York City, not the best mayor for New Yorkers, but the best mayor for Donald Trump as his administration.
We need a mayor who can stand up to Donald Trump, who can get the funding that New York deserves, who can make sure the National Guard does not come to New York. I can stand up to Trump. Trump will go through Dani like a hot knife through butter.
New York City mayoral candidates Zohran Mamdani and Andrew Cuomo speaking ahead of today's election. Bloomberg's Miles Miller joins us now from Brooklyn Bridge Park, who's been monitoring this election. Miles, what are the signs we've seen so far? Is this Mamdani's election in the bag, essentially, at this point?
What I'll say is the winds of change appear to be blowing here in Brooklyn Bridge Park, and that's probably what's going to happen during this election, of course. Mamdani is looking at a margin that is probably somewhere between 45 and 50 percentage points, and what he told me this morning is no matter what the margin is, he believes it's a mandate for change in this city. Mamdani is, of course, pitching a very populist plan to have free childcare, to make the buses free, taxing the wealthy, and to freeze the rent. How do you get any of those things done is very different depending on who you ask. To make the buses free, you have to figure out a way to fund those bond obligations the MTA has. To make childcare universal and free, you have to figure out a way to pay for all of it. But that's the pitch he made to New Yorkers. It appears that that is what many New Yorkers like to hear. But there are other New Yorkers who think Andrew Cuomo coming back wouldn't be such a bad thing because they saw what he did as governor for 10 years here in New York.
I mean, a disgraced governor leaving Albany before his term was over and now appears to be much closer to Donald Trump than he was then. How do New Yorkers deal with that?
Yeah, he says he's the only one who could take on Donald Trump. But then you saw yesterday Donald Trump really putting, the brakes to that and saying, wait, hold on, take me on. You're the best person that I think could take this job. I'm going to endorse you. Cuomo said because he didn't call him, it wasn't an endorsement. It wasn't a tacit endorsement. But we saw it for what it is, an endorsement of Cuomo by Donald Trump. Does that mean he could take him on? And also, would that endorsement actually matter? It's so late in the race. A lot of people have already made up their minds. We talked about this earlier today. 730,000 plus people have already voted. And when all is said and done today, will this endorsement matter? Probably not. But one thing that's really important to note is that Mamdani has said he would work with Donald Trump on affordability because that's what Donald Trump campaigned on, right? To make groceries cheaper, to make the gas cheaper, and of course to make medicine cheaper as well.
All right, Miles, thanks very much. Bloomberg's Miles Miller will be covering this election for us all day today. And of course, tonight we have a special edition of Balance of Power. That's going to play out for a couple of hours from 5 p.m. to 7 p.m. Tomorrow we'll be all over it with the results as well. Meanwhile, over in New Jersey, voters are heading to the polls to elect a new governor. Recent polling shows Democratic Representative Mikey Sherrill leading over Republican Jack Citarelli. Bloomberg's Romaine Bostick joins us now from Jersey City with a special guest. Romaine?
Thank you, Matt, and welcome to our audiences across all of our Bloomberg platforms, television and radio. I'm in Jersey City, New Jersey, with the congressman for the 8th District of New Jersey, which represents most of Hudson County and a good chunk of Jersey City, where I'm standing right now. Congressman Rob Menendez, great to have you here, sir, on a day where I think a lot of people are really looking right now to the State House and wondering whether this is that year where we end up with a Republican governor for the first time in a while.
Yeah, listen, New Jersey and Virginia are the epicenter of the political universe right now here in America. And so Mikey's made the case every single day of this campaign. She came out of a contested primary, ran away with it. And every day she's been disciplined about the issues that New Jerseyans are facing. So she knows there's an immense amount of work to do. She's raised her hand and dedicated herself to New Jersey, to the American people. And this moment she wants to deliver for New Jersey. And I believe that that has resonated with a lot of our voters.
There's been some criticism of the campaign that Mikey Sherrill has been running, the idea that that campaign is a little bit more high level. It's about national issues, while Jack Citarelli seems to be focusing a little bit more on the kitchen table and pocketbook issues, if you will. What are you hearing from voters as to what they actually want? What are they going to the polls to vote for today?
So I think there's two main issues in this election. One is the affordability challenge that a lot of Americans and New Jerseyans are facing. Two is they want a governor that's going to stand up for New Jersey. Yeah, so at times work with the president, but when needed, stand up to this administration. We've seen this administration overreach in L.A., Portland, Chicago. If they come to New Jersey, we want a governor who's going to protect us. And so those are the two issues I hear the most. And Mikey's been laser focused on both of those issues. She's talked about affordability and what her administration would do to address that here in New Jersey. She's also made it clear that she will stand up to Trump. So I think those two issues are the center of this election, and I think she's done a really good job of articulating a clear message to New Jersey voters.
In talking to voters, you hear a lot about housing affordability, but as of late, you're also hearing a lot about the issue of affordability of electricity. Power prices have jumped more than 20% on a year-over-year basis. Part of that's good. I guess that's a sign that you're getting these data centers and other things moving to the state. But when it raises the bills for homeowners and businesses, you need something to address that. What's the plan?
So she's made it clear that on day one of her administration, she's going to declare a state of emergency on the energy price hikes. There's an immense amount of work that we have to do with our regional operator, PJM, the production that we have in New Jersey. And we also have to look at how demand has changed. You mentioned AI data centers. It's good for New Jersey to be a leader on AI, and you need those data centers to do so, but they require an immense amount of energy. There are ways, and we're looking at it in Congress, it's one of the things that I'm doing on energy and commerce, to think about how that increased energy demand, which could be 13% of all energy demand in the next several years, how that doesn't get pushed to our consumers, our residents. So it's going to take all hands, whole of government approach, but she's made that a clear priority of hers, and that's a day one priority. So I know it's something that she's looking forward to tackling as governor.
Another big issue, of course, is taxation, the idea of addressing some of the budget issues, potentially raising the sales tax once again, as well as corporate taxation. Do you think that's something, that the governor, no matter who it is, would actually follow through on, and would there be enough support at the State House to see that through?
Well, I think you can take innovative ways, right? Like, I think, yes, traditionally money in, money out, right? So if we need to spend to grow and build New Jersey, then we need to raise the revenue to do so. But on something like mass transit and infrastructure, there are ways to do it where you look at the assets that NJ Transit has that are underutilized. And if you can make better use of them, you can actually create revenue for the state without having to raise taxes, raise the levy. So I think think Mikey is going to have an innovative approach. I don't think she's just going to go and say we have to raise taxes because we have to pay for A, B, and C. I think she's going to look about how the state has underutilized assets, how to make better use of them to reduce the tax burden on New Jerseyans, because it goes into the affordability crisis, whether it's energy, whether it's taxes. These are what people are thinking about.
You represent Jersey City, the second most populous city in the state, and really third most populous, really, in the entire New York metro area. It's seen phenomenal growth over the past few years in terms of new residents and new businesses. How do you get more businesses, and not just the big companies, but small and medium-sized businesses, to actually set up shop here?
Yeah, I mean, you have to have a competitive landscape. So I think New Jersey's done that well on the film industry, right? We've seen an announcement in Bayonne where they're opening up a new studio. We have one here in Jersey City. We have one in Newark. Government needs to work with private sector, and that's things like giant studios to small and medium-sized businesses. You have to have a competitive landscape. It's something that we think about at the federal level. I know municipalities think about it, and that's something that the state needs to continue to lead on. We want to drive business here. We want to grow homegrown businesses that are at the center of places like Jersey City and make sure that we create an environment for them to do so.
We were remiss in not asking you about the government shutdown.
Yeah.
We're now basically officially at 35, the longest government shutdown, longest full government shutdown in history. Where is the discussion right now between Democrats and Republicans in Congress, particularly in the Senate? Are we any closer to actually getting this resolved?
Yeah, I think we are inching closer. But, you know, for us, it's been a clear mission that it goes back to the affordability challenge, and specifically for Democrats, health care. You know, Republicans voted to take $1 trillion out of Medicaid. That's going to make health care more expensive for everyone. We know at the end of the year, the ACA premium tax credits expire. So if you allow those to expire, premiums are going to increase for everyone on the exchange. At some point, it has to stop, right? We're talking about SNAP and the administration not funding it. Well, before that, they had the largest cut to SNAP in the program's history. So the pain has to stop because we see it every day when we're out with our constituents. That's what Democrats have been fighting for. The center of it has been health care. We're going to continue to fight for that. And Republicans look like they're interested in having a conversation specifically on the ACA. And I hope we get to that conversation, get the government back open.
Are you comfortable, though, with the leadership by the Democrats in Congress in trying to navigate through this crisis?
Listen, we're in the triple minority, right? And so we've drawn a line in the sand that for the American people, we have to deliver more affordable health care. That message has resonated with people. When I'm out, people say, hold the line, keep fighting for us, because if we do nothing, we will not be able to afford our health care, our housing, our prescription drugs. That's what Democrats are fighting for, and they're happy to see us do so, and they are in this fight with us.
All right, circling back to the election here in New Jersey, I do have to ask you, we've had 4 years here of Phil Murphy. Maybe potentially that legacy continues with Mikey Sherrill. When you take a look at Murphy's legacy, what do you think he got right? And more importantly, what do you think he maybe did not take advantage of?
So, I mean, I think he got an immense amount right on moving the state forward on a lot of things that were responsive to what was happening in the first Trump administration, codifying, you know, reproductive health care here in New Jersey. He's done an immense amount to drive the economy here, from being a leader on AI to tech to film studio. So he's done a lot to grow New Jersey, grow New Jersey's profile. You know, I think on the energy front, I think we could have diversified our approach a little bit more to not bake so much of it into offshore wind, but to really maximize solar, to look at nuclear, to look at fusion. But he still did so much, and I'm really proud that he was our governor for these important years.
Only about 30 seconds left, but looking ahead to the potential results that we get tonight, the polls have gotten a little bit tighter over the last few weeks. Citarelli has really closed the gap with Sherrill. You think she's still going to pull it out?
I do. I've seen the momentum on the ground the last several days. Last night in Union City, 2 days ago in West New York, it's palpable. And people know it's on the line. I think when they're in this final moment, they have to make a decision in the ballot box, they're going to go with Mikey because she's a true leader for New Jersey.
All right, really appreciate you taking time for us, Congressman.
Appreciate it.
That's Congressman Rob Menendez of the 8th District here in the state of New Jersey as we keep a close eye here on the gubernatorial race. Back to you in our New York studios, Romaine Bostic here from Jersey City.
All right, Romaine, thanks so much for joining us. Bloomberg's Romaine there with New Jersey Representative Rob Menendez. And catch Bloomberg's special election coverage tonight at 5 p.m. New York time. That's a 2-hour show, at least, if I know those guys. You know, if anything crazy happens, they'll go live and keep going.
Yeah, I mean, the presidential election, I worked 24 hours, I believe. We kept going. So correct, we do that.
Yeah, that happens. Let's get a check of what's going on in the markets right now. We're not seeing the kind of big drops that you may have expected before the cash session started. We had futures down more than 1% on the S&P 500. NASDAQ futures were down about 1.5%. We're still seeing losses as Nvidia tumbles and Palantir falls even more. But right now, 68.18 is the level on the S&P and the 10-year yield. Down right now 3 bips at 4.0793.
Obviously, the problem is that OpenAI hasn't made any announcements today. 0 partnerships, nothing to lift the market.
I'm sure that'll come. You know, we still have the entire trading day. There are some stocks moving at this hour
some
that
big
we should
movers.
take a look at. I mentioned Palantir.
I mean, Palantir's the mover of today because it seems to have turned overall sentiment better than expected earnings, but there are concerns about its valuations. They are over, I think it's 85 for sales to price.
No, price to sales is over 100.
Okay, I think it's revenue then to price, then that's 85.
About 300 times earnings as well.
It's a crazy figure. And so even if you have the best earnings, maybe this is naturally the result. Shares fall 6.3%.
All right, Tesla is dropping as well today after Norway's sovereign wealth fund, the world's largest, voted Elon Musk's $1 trillion pay package down. Shareholders really want the CEO of Tesla to get paid $1 trillion.
That they do.
Because it would be a huge gain for them, right?
Well,
the amount of things, that he has to do to get that pay is to make them very rich.
Yes, correct. And other movers today, Matt, Pfizer, Novo Nordisk, they've boosted their bids for Metsera. The battle for the obesity startup continues. Metsera surging just under 15%.
Coming up, more on the AI trade as Palantir tumbles on fresh doubts about stretched valuations. This is Open Interest.
Palantir shares continue to slide. The sell-off comes even after it topped third-quarter estimates and raised its annual revenue outlook. The good news outweighed by concerns of the company's valuation, which, Matt, clarifying, it is a trailing price to sales that is 85. The average for the S&P 500 is 3.5.
Right, so you're talking about the trailing numbers.
Yes.
I think of the estimates when I think of valuations.
It literally doesn't matter how you slice it, it's high, right?
Yeah.
Like that is the point.
But they're expected to earn a little under $4 billion in sales, total sales this year, and they're trading for $460 billion.
Maybe that's enough where you'd want to look for a reason to sell. Joining us for more is Bloomberg Markets correspondent Nora Melinda. Nora, is that all this is, a reason to sell an expensive stock?
I mean, that's the question. I mean, the CEO, Alex Karp, I feel that he coined it best. He said that we're in nosebleed territory. He said we're in nosebleed zone. No one else is here. And I think that's what Wall Street is starting to potentially see as a concern. As you all were pointing out here, price to sales ratio on a trailing basis is at 85, and that's the highest in all of the S&P 500. So as we've really been having this conversation about potential valuations being too stretched, as people are really zeroing in on AI, of course you're going to start to see a microscope, people really tearing into these earnings and starting to wonder whether or not the company has stretched too far.
I love the modal function on the Bloomberg terminal.
My favorite.
MODL gives you a great look, and you can dive deep into the company's financials. I bring that up because that's where I saw the estimate for 2025. This is Palantir. If I bring up Nvidia, I don't see nearly this kind of price to sales ratio, right? They're looking at revenue at the end of the year in the hundreds of billions, and yet they're only worth $5 trillion. Why sell off Nvidia today?
No, I mean, of course, we did hear also from Michael Burry when we were looking through the 13F, where he did place bearish wagers on both Palantir and Nvidia. So as you think about this risk-off rally that we're currently seeing ensuing, that's when you're really seeing some people starting to pull out of companies that have been mentioned on a lot of the trading day so far this morning.
These are not the charts you're looking for, says Michael Burry.
But do you know the reference, Nora?
Please.
That's a Star Wars reference. In the first movie, which is actually episode 4, Obi-Wan Kenobi says that to the kidnappers that took C-3PO and R2-D2.
To say that, like,
right over my head.
To say that this is a Jedi mind trick. In other words, the valuations are a Jedi mind trick to bring it all back together.
Thanks for bringing us together.
Of course. Nora, Melinda, thank you so much for joining us. Coming up on the show, world leaders gathering in Brazil for the UN's annual climate meeting. We're live in Sao Paulo. That's coming up next.
The Paris Accord was designed for the US to join. So, because the US had not joined the Kyoto Protocol, so the international community designed an agreement that the US could join. And so it's obviously very unfortunate that the US is not in. But as many actors in the US, very important people in the US say, it's the American government that is not present. It's not the American economy.
That was the president of COP30 speaking with Bloomberg's Vonnie Quinn in Sao Paulo. Vonnie joins us now. So, Vonnie, what are the critical questions COP30 is attempting to address here?
Yeah, Matt, I mean, the NDCs are the big one, right? We only got a third of countries submitting their nationally determined contributions, which would be the plan for the next 5 years in terms of reducing carbon emissions. You know, the Paris Accord was 10 years ago, so that's 2 sets ago now, and it looks like many more countries are deferring, not putting their plans on paper. We're waiting on the Europeans, for example. They're supposed to be talking late into the night tonight, and the deadline was the end of September. So we already got the UN synthesis report. It didn't include some of those countries, but even with the countries that did submit, which was about a third of countries, we're finding that implementing current policies would still lead to 2.8 degrees Celsius of a warming gap between now and 2035, which is very, very far away from what the Paris Accord had looked for. And if the pledges are fully implemented by all countries that have even indicated some plans, temperatures will rise 2.3 to 2.5%. So you can see we're not getting there fast enough. We're definitely not going to meet the 1.5 degree goal that had been set at Paris. Not only that, but none of the countries have put in language to phase out or reduce oil and gas production. And that was seen as one of the breakthroughs of Dubai last year, the COP in Dubai. That said, there is some hope. Emissions are set to fall 10% by 2035. That's not nothing, right? But if we were to meet goals that scientists say are needed, those emissions would have to fall by 60%. So it's a big difference.
So are there any deliverables out of this COP30 to get us there, Vonnie?
Well, you heard the president there, Dani. He was very forthright, actually, about the US not being present. It's definitely weighing a little bit. People are demurring. They're maybe not being so open about the US not being here. They're sidetracked a little bit. But they are talking about multilateralism. They are talking about parties discussing with each other what can be done, finding new ways to get to new types of agreements and so on. So there is a lot of enthusiasm. I will say I asked the president if there was going to be a cover decision. Now, this is not something that's legally binding, but it's something that comes out of many COPs, and it sort of puts on paper pledges. It's a public declaration of what countries are going to do. He actually said he doesn't think there's going to be a cover decision this time around, but that's okay by him, because what he wants is to show the world that multilateralism is not dead. Now, I'm not sure if the two go together, but certainly there's a lot of hope for a lot of talking, a lot of negotiations, and perhaps maybe some innovative solutions to some of the problems that the world faces. After all, a huge amount of money is going into this, and while, you know, less money might be going in under the Trump tax and spending bill, we did have the Inflation Reduction Act, which sent a lot of money into this space. $2.1 trillion last year, in fact, the most ever.
Vonnie, thanks very much. Vonnie Quinn there reporting from COP30 in Brazil. This is Bloomberg.